And I'll hand it over to Vanessa.
Thank you, Leslie. Welcome, everyone, and thank you for joining today. My name is Vanessa Macias. I'm the ECE Deputy Director for the Western Region at LIIF, the Low Income Investment Fund. Here's a little bit about who we are. We're a leading community development financial institution. We've been around since 1984. We have a strong early care and education team that supports childcare providers and the development of childcare facilities. Many of you are our infrastructure grant program grantees, so welcome. As many of you know, LIIF has been deeply committed to strengthening early care and education infrastructure across California, most recently through the Infrastructure Grant Program. And you all have been doing incredible work to grow, improve, and sustain your family childcare programs. As we continue supporting providers like yourselves beyond construction, renovation, and repairs, we also want to ensure that you have access to the tools and resources you need to grow as small business owners. So that's why we launched the Family Childcare Capital Program. It's a partnership designed specifically to help family childcare operators access responsible, flexible capital and the technical assistance needed to thrive. Today, we are thrilled to be joined by our partners on this program, Diane from Ascendus and TT from Working Solutions. They will share their loan programs, capital products, and business supports they offer for family child care businesses. From startup and expansion loans to individualized credit building resources, together, our goal is to help you understand what capital readiness looks like for business and explore financing options that may support your next stage of growth. I'd like to share actually one story about one of the borrowers that we worked with. It's a story of Felisa Wright. She is in Los Angeles County, and she is recently a borrower with Ascendus. She's a family childcare operator. She actually lost her home in the Eaton Canyon fire in January. And subsequently, she lost her business as part of that as an FCC owner. She is part of the LIIF's LA Rise Fund, which helped her with equipment, materials that she needed to run her childcare program. But she actually took that family childcare business that she lost and moved it to a center. And now she's opened up in a local church facility and used this Ascendus loan to hire 3 staff and get herself operating into a center, which is not easy, as we all know. So she made it happen, and she now operates the Right Choice, which is a great name for Felisa Wright. And just wanted to share that. We have another story too on our LIIF blog of Ashika. She's also another borrower, and she used this loan to help her get with more marketing to get more enrollment. I know that enrollment is an issue that we're all facing, and she was able to get more materials and construction to make her beautify her home, and also she hired a STEM consultant so that she would be more appealing to prospective families. Anyway, thank you again for being here. We're grateful for the work you do every day for our children and our families, and we hope this session offers practical tools to support your long-term success. We will hold space for questions at the end of the presentation, so please feel free to, jot anything down that you'd like to ask, but we also have the Q&A box for any questions that you have that we will monitor. Any tech questions, please put them in the chat as well. With that, I will pass it over to Diane at Ascendus to learn more about them. Thank you, Diane.
Thank you, Vanessa. All right. Good afternoon. I'm very happy to be here with you guys and spend the next hour talking a little bit about those options that you have available to you. We know you're very busy. You're a very important part of our community, and I really appreciate you taking the time to be here today. Now, I am going to start just telling you a little bit about me and Ascendus. I am a lending manager at Ascendus. We are a nonprofit CDFI, also just like LIIF. We started this partnership this year, but we have been around for over 30 years supporting businesses. Our mission at Ascendus is to empower low to moderate income business owners to access capital and financial education. And we have been doing so in many different industries, not only the childcare industry. Back in 2018, we started to look into the industry. We started to see that there was a need, and we started to design a program that would be the right fit, more specifically for home-based childcare providers. Now, that doesn't mean that we only work with home base, we also work with centers, but the program that I'll be going into today focuses more on that program for childcare providers that are home based. Now, just a little bit about the work that we've done in the industry. We have served since 2018, 2019 when we started the program. We've served over 860 childcare businesses. We've provided over 17 million in capital. And of those businesses, 485 were home-based childcare providers across the US, receiving approximately 8.8 million. Now, I want to talk a little bit more about the program itself. The program started in the Bronx in New York. We actually hosted some focus groups with home-based childcare providers. Leslie, I'm not sure if you can help me go to the next slide. I'm trying to click, but it's not working for me. Thank you. And we learned from you, and what we heard is that you needed something that was fast, that was easy, that was reliable, and that was industry focused. And the main reason for that is that you tend to be very busy from 9 to 5, even longer days. And so it's hard to be able to step out and go to the bank to collect documents, to bring them. So you wanted something that was easy. You wanted something that could be reliable, where you could trust the process, where you could trust that it was a responsible lender. And also you wanted it to be industry focused, because a lot of times when the business is so small, especially when you're a home-based provider, it can be difficult to just go to the bank and show them that you're a formal business. Um, and that's where the idea to create this program came from and how we design it. On the next slide, we'll talk a little bit more about the specifics of the program itself. We designed a childcare fast track program, which we are bringing to you through our FCC Capital program in partnership with LIIF, where we are offering home-based childcare providers that have at least 3 years in operations, up to $25,000. Now, we are able to pre-qualify you for an amount between $5,000 to $25,000 in 48 hours and get the funds disbursed in about a week's time. Um, I can go, actually, I will just go over this quote from one of our clients. Her name is Jashika Taylor. She is a childcare provider in Massachusetts. This is where I'm based. And she says, I use the Ascendus loan to hire more staff members and to buy equipment for the kids. I have used multiple Ascendus loans through the years. They've always made me feel safe, seen, and secure. I have personally worked with Jashika from the very beginning. She has received multiple loans. And when we started with a smaller amount, but part of our vision is to grow businesses, right? And so it comes from our name, Ascendus. We want businesses to ascend and to grow, and to go up that financial ladder. And so sometimes you might not get exactly what you're looking for, the specific amount, but if we're able to get you started, even with a small amount, we will, because our goal is that you will grow over time with your business and you'll be able to access the capital you need. On the next slide, here are the specifics of what is required to qualify for this program. Now, as I mentioned at the beginning, you need to be licensed, home base for at least 3 years. you need to have at least a 575 FICO score or no established credit history. If you do not have established credit history, that means you don't have a score, you don't have any credit history reported. We can get you started in building that credit history. And what we'll do is we'll start with a small amount, up to $5,000. Once you're able to demonstrate that you can manage that well, that loan well, we'll be happy to revisit and we can always try and see if you can qualify for more in the future. Now, we also look for any derogatory items on credit. So if you do have established credit, we want to make sure that you have less than $3,000 in past due debts. That's anything like collections, charge-offs, or liens. We do understand that there might be some hiccups along the way, but we do want that past due amount to be below 3,000. When it comes to bankruptcies, we also allow bankruptcies in the past as long as they don't involve the business and they have been discharged for at least 12 months. If there have been foreclosures, we're also okay with that, so long as they didn't happen in the last 24 months. We also don't want to see any late payments on mortgage or rent in the last 12 months. And you cannot be enrolled in any hardship relief programs. A lot of what I see today is for those that have received SBA loans, they did offer a hardship relief program for 6 months. And if you are enrolled with that, we do have to wait until you have been through the program and you're out of it and already have started to make regular payments towards the loan. And of course, you need to demonstrate the ability of repayment. This means that you need to be able to show that you can make payments towards the loan. Now, the program itself requires limited financials. This means that we're able to pre-qualify you over the phone. We're able to access a lot of the information through public records. And we are going to look at your personal credit. And so with this information, we're able to run the numbers and give you a pre-qualification on whether we see that you can afford making payments towards the requested amount. And if so, then we'll be able to then just request ID verification. We'll like to see some photos of the daycare. We need to have an account where we're able to disperse the funds and where we'll collect monthly payments because we enroll you in automatic payments. And we need personal references. So that's really all you need to be able to go through the process if you meet our minimum criteria. On the next slide, you can see some of the ways you can use the funding to support your business, your daycare business. We can help you with payroll, with hiring and training staff, professional trainings and licenses, improvements and renovations, educational materials and supplies, advertising and marketing, furniture, toys, equipment, purchase of playground equipment. If you see the photos, every photo that you see on this slide belongs to childcare providers that we have worked with in the past. And these are some of the things that they've been able to achieve. So here you can see that one of our providers, Little Steps Family Daycare from Boston, Massachusetts, was able to get some playground equipment, and they were also able to make some updates and renovations to the inside space. On the next slide, I have a little bit of information about the benefits of our childcare program. I know that sometimes it may not feel right to borrow money, and is not always right, but is not always wrong. Not all debt is bad. You just need to make sure that you have the right purpose, right? And so it's important that you do have a need, that you know what you're going to use it for, that you understand how much you need, so it makes sense for you to borrow. Something important to keep in mind is that for business loans, they are often taxed, the interest paid on it is often tax deductible. So that's something that you can write off your business taxes versus having, let's say, a personal loan or using credit cards, which is not typically recommended. I know when you're a small business, it may be very easy to just go and use your personal credit card to make specific purchases. But if you think of the average interest rate nowadays, which is around 26%, sometimes even higher annual rate, it's very high. So would not recommend doing that. And it's often when you have an expense and you have a need to actually go for a loan. In terms of the specific terms of the loan, we are not a predatory lender, we're a responsible lender. We have monthly payments and up to a 5-year term. We don't have early repayment penalties, and so you can always pay back the loan faster if you choose to do so. It will also save you some money on interest, so I always recommend it if you're able to. And we have a quick process for pre-approval. Now, if you're not a childcare home base that is in business for 3 years, we can go on to the next slide. Maybe it could be that you are a center or you are a home-based childcare provider that's been operating for under 3 years. We do have a program that we can also look into, and that is our regular microloan program. That program can go from $500 to $25,000. The difference is that it's not fast track. We're not able to pre-qualify you as quickly and just over the phone with limited financials. For this specific program, if you have over a year in business, we are going to want to see tax returns. If you have been operating for less than a year, we're definitely going to just be looking at bank statements. And if over a year, we're also going to look, in addition to those tax returns, we are going to be looking at bank statements as well. Something also to keep in mind about all of our application process is that we use soft pull technology. And so your credit will not be affected by applying. It will be a soft inquiry on credit. Our interest rates, again, are fixed. Our repayment schedule can be up to 60 months, which is 5 years. There are no prepayment penalties. Now, on the next slide, I have some common questions that we get. To start, one of those is what if Ascendus is a CDFI? What does it mean? Vanessa mentioned it at the beginning, but that stands for Community Development Financial Institution. And that means that we are an institution that works for our community in order to improve their financial health. And so we are mission-based. For us, you are not just a number. We are here to try to understand and help you and offer more flexibility. And so we tend to be a little bit more flexible than the more traditional options. With that said, we are not the forever solution. Ideally, we want you to start building yourself up, to start growing, and eventually to be able to access these more traditional products that are out there for you. Another question we get a lot is whether this is a loan or a grant. Since many of you are guarantees from the LIIF programs, you may get confused and think that this is a grant. It is not. This specific program is a loan. It must be paid back. It is paid back with interest and principal. Now, what are the terms and interest rate? The terms, like I said, it can go up to 5 years depending on the loan amount. So anywhere between 1 to 5 years. Interest rate that we're working with right now is between a 9.99% and a 15.99%. Can you pay back the loan early? Yes, there are no prepayment penalties. Can you use the loan to pay off other debt? Unfortunately, if you use personal credit cards, no. But if you have business credit cards, or if you have another business loan that it's higher interest rate and it makes sense for us to refinance, yes, you'll be able to use the funds from this loan to pay off that debt. And whether we speak other languages, including Spanish, yes, we do speak Spanish. There's also Portuguese speakers. We also have Italian and French. Now for the last slide that I have, just next steps. If you're interested to learn more about our program, please reach out to your LIIF program officer. They will make sure that they get you ready and make sure that you meet our minimum criteria so that they can connect you with the right Ascendus representative. And that's it on my end. Thank you for your time.
Thank you, Diane. Before we move over to working solutions, I also wanted to add that LIIF definitely made it a point, because we're ECE people, to work with CDFIs that were not predatory, that were here for family childcare businesses and for childcare small business owners. So thank you to Diane and Titi for being our partners in this and making sure that our childcare businesses are have access to reliable and flexible capital. So with that, I'm going to pass it over to TT with Working Solutions. And again, we'll save our questions. Please put them in the Q&A, and then we'll save our questions till the end.
Okay, Vanessa, I think I'm going to need your help to advance it as well. Okay. Look, it's working. All right. Good evening, everyone. My name is TT Kila, and thank you for joining. I am with Working Solutions, and I'll be sharing a bit about Working Solutions and loan readiness and what's it's required to get a loan with us. And so, just as well as Diane mentioned, as Ascendus as well, we're also a CDFI, which means it's a community development financial institution. We're based here in California, and we serve the entire state of California. Where we also well, our loan size ranges from $5,000 to $100,000, and we're nonprofits, mission-driven nonprofit. And one of the things that distinguishes us from some other CDFIs is that we do specialize in microloans for startups and early stage. That means we can help your business, help you launch a new venture or expand your business. And we also offer free business consulting for your business after you get a loan with us. So a bit about us. We are, in terms of what we've done and some of our impact as an organization, not only that, we've been serving the community for about 25 years. We've also been in this last 20 years, we've served over $65 million that we've deployed in loans and grants. That also includes over 60,000 technical assistance hours and over 3,000 businesses we've supported. And 90% of our loans are less than $50,000. And you can see with this graph here that in the last 5 years, we've had a significant leap in getting capital out. Over 40 million of that came in the last 5 years. And that's a testament to a couple of things. It's first that there's a need, and there's a need that we keep serving, and also as an organization that while we had initially started in the Bay Area, we've expanded across the state, and so we have a strong niche in supporting small businesses and startup companies in California. As part of that niche I mentioned, 80% of businesses we serve are early stage, that means 5 years or less. Over 50% are startup, meaning that they're about to launch. And when we say startup, we mean somebody that it's either a year or less, or they've not even launched yet. So our funding can help you start a center or family child care center. We also prioritize getting funds out to low-income entrepreneurs, to entrepreneurs of color, and women entrepreneurs as well. A little bit about some of our clients that we've recently supported in San Diego. They were starting stay-at-home mom and decided that they wanted to start and transition to getting a child care center going and supporting the community. We were able to use our fund. They were able to use our funding to get that capital, to get the capital needed to start their own home-based family child care. So a bit about our product. Like I mentioned, we offer $5,000 to $100,000. Our rates are between 3 to 5 years, and we have a fixed 11% interest rate. We have a $50 application fee that also includes a closing fee of 5%. We require personal guarantee. What that means is that you're taking on a loan where the expectation is that you also are making a commitment to also be committed to the business as well, that if the business is not able to pay, you personally are willing to continue to make the payment. What we don't do is we don't have collateral. That means we don't go after your home. We don't ask for your home as a collateral. We don't ask for your vehicle as a collateral. We only ask that what we do is we'll ask for UCC, which means that your business assets, you pledging that you're going to continue to make the payment on the loan. So if you're a startup and you're about to start, we don't expect you to have any business revenue. We don't have a minimum credit score. What we look for is that at least you have another source of income or co-sign of somebody to support you. We also accept ITIN, so if you don't have a social security number, we can also help. There's no prepayment penalty. That means that if you decide that tomorrow you win the lottery and you want to pay us off, we would happily let you do that without any extra fees. So you can pay us accelerate payment and even ask to pay extra early on. Okay. All right. So besides the capital that we offer, we also offer consulting. So one of the things that we believe is important is because we prioritize the startup companies that we want to ensure that businesses have the right support that they need to grow. And so at the early stage, we have financial education, supporting you with the loan application process, both in English and in Spanish. Then after you get the loan, we want to make sure that we don't leave you alone as well. And so we have a team, you're assigned to a consultant in-house that helps to make sure that you are following some of the right plans that will help your business stay sustainable and growing. And even if you need additional capital, to keep that in mind to help you find additional capital. We've sometimes referred our clients to other sources, or maybe we find out about grant opportunities and things that could be helpful for them over the life of the loan. And one of the areas that we also provide is we have an online digital self-paced tool that allows the business to learn from it in different languages. And we focus on 3 core areas: the money, which means that as a business owner, it's important that you know how you make your money and how things are spent and when things are going in the right direction and when the red flags are. So we offer courses on that. We also have area on management that you can have as a business owner, understand the core principles of operating your business and keep those things in line so that your business, how you manage your staff, how you manage your scheduling. And then the last is the marketing. You want to make sure that you know how you're going to get your enrollment up. What are the ideas that you have? How are you marketing yourself? What's your reputation with parents? What are your strategies to kind of get those things, your business continue to grow? So this all come to you at no cost support that you get after you get a loan with us. And so what are the eligibility? First, you must be located in California or plan to locate your business in California. You must be at least an adult, have a social security number or an ITIN. We do not need to know about your citizenship or residency status, or we don't ask about visa. We just ask if you have a social security number or ITIN. Have no past due accounts or active tax liens or judgments, meaning that you're, at least current. Even if you've had collections in the past, we can still review your application. We just want to make sure that there's nothing new current that's currently on that you've not resolved. You also want to make sure that there's no recent bankruptcy, that any bankruptcy you've had has been discharged in the last 12 months. And anybody that you have, if you have partners in the business, we're going to ask the same of your partners. Anybody that has 20% or more ownership will be required also to have the same eligibility requirement. We'll at least require that at least one of the business owner reside in California, and at least one of them, if it's a startup, that you have demonstrated same industry experience for at least a year. And again, if you're a startup, that we also want to make sure that you have a secondary source of income, because we know that if you're starting a business, you don't know the future, how the business is going to run. We want to make sure that you have income to back you up. Sometimes that could be a spouse, that could be a friend, that could be a family member, that can be a co-signer to help you get to that point where you can afford the payments. So what are the application steps? First is that you submit a loan inquiry form, which is available on our website, but more because you're a LIIF client and a grantee, we highly recommend that you work directly with the LIIF staff to help. And then the second step is that you complete a loan application. Once you get that, submit that loan inquiry form, it pretty much it's like takes 10 minutes for that step one. And then you get a notification with a link to the loan application. That takes like less than 30 minutes to complete. Then we move to the next step, which is verifying bank information. Depending on how much your bank, if you're depending on the kind of nature of your bank setup, many bank connections, we ask that you connect the bank. It makes it faster for us to process your loan. But in the case where maybe your bank is not, be unable to kind of connect it, we would ask you to upload documents to us. And those documents then we would review them plus the verifying the bank information. And that moves us to step 5 and application review. Typically, depending on how much you are asking for, to what degree you've reviewed, your documentation is clean. Those things affect the timeline of if we have questions or clarifications, we might reach out back to you. And ultimately, we get your decision to either as a yes or a no. And if it's a no, we give you a reason of what you can do to come back. And if it's a yes, we proceed and we move you forward to fund. Everything is done electronically. We ask for your bank account that you upload your bank so that we can wire the funds to you. We said 2 to 6 weeks because we are making room for people that maybe their bank account information might not be easy to verify. But if these things connect faster, it could be as quick as 2 weeks. We've even have some fast track opportunity that could be available depending on your credits and things that we could offer to get you the loan even much faster. But we like to set the expectation because we're not sure where you will fall into this process. And again, remember that you can be a startup. We don't have a minimum credit score, and we can go up to $100,000. So those are our requirements as an organization, and we serve the entire California. And this is a bit about our information. Again, we have our email in case you want to reach out to us directly, or we also highly recommend that you work with your LIIF program manager to get connected to us. Thank you again for your time.
Thank you, TT. All right, we're going to open it up. I'll start with the questions that are in the Q&A first, if that's okay for both Diane and TT. I just want to tell everybody too, like TT and Diane had mentioned, if you're interested, to please reach out to your LIIF program officer. They're the ones who you've been working with on your infrastructure grant program grant, and they can work with you before they refer you to the right partner, whether it be Ascendus or Working Solutions. Okay. And so the first question that we have here is, do you have resources for home loan products specific for childcare providers? It can be difficult to calculate our income properly considering the write-offs we have and finding a lender that looks beyond a typical profit and loss statement. Home loan?
Is this for to purchase a home? I'm assuming maybe purchasing a home. I would highly recommend that they work with a credit union if it's to purchase. But if it's to fix the home, our loans can be used to make the home much more. We've done that. We've helped people fix their windows, make it more, do double pane, energy efficient, roofing to make it more like to stop leak. As long as it's connected to the business and the repairs are connected to business, we can use our loan for that for repairs.
I would say same as DT. If it's specifically for just maybe if you're thinking of a home equity line of credit and maybe you want to do it under a business loan instead to make fixes towards the home, that you can use our loan product towards. We don't do anything on the personal side because at Ascendus we're only a commercial lender and we wouldn't be able to do anything like a personal mortgage. But I would suggest definitely just looking into your community banks, credit unions, and also speaking with a accountant. I think you should have a team on your side, and that should include a banker and an accountant that can probably give you better advice when it comes to doing your taxes and preparing yourself to applying for a home loan.
Thank you. Do you need to have a business checking account to qualify for either of you?
Oh, sorry, not for us, but you will need to have it by the time the loan is funded. Depends on the stage of business, for us. But you don't need to have, but by the time if we approve the loan, we would expect that you get it so that um, we can put the funds in the business account.
With Ascendus, we don't require it if you are a home-based childcare provider. However, we do recommend it. It is best for you to use a business bank account towards your business, but it's not a requirement.
Thank you. Another person wrote they've already received a loan from one of you all, and they're wondering if they can apply for another loan.
Go ahead, Diane.
Yes, and with Ascendus, you are able to apply for a second loan product so long as you can afford it. In addition to term loans, we also offer lines of credit. And so you can have both at the same time, or if you do need additional funding as a term loan, typically what we do is a refinance. For that, you need to meet our eligibility for refinancing, and that is that you have either paid the balance down below 50% or that you have made at least 18 consecutive payments towards the loan that have been on time, and you have an actual need for additional funding and you're able to meet the requirements to access more funds.
For working solutions, our rules is based on 6 months. So at least if you've been paying with and consecutively making positive payments on time payments for 6 months, you can come back. We would do another screening to see if you can afford it and determine if you have affordability. And we have it capped at the 100,000 as a total amount. So if you've really got 50,000 the previous time and you want to come back, the max you can come back is additional 50. The total can be would not be able to go over 100,000.
Thank you. A question for Diane. Can you repeat the interest rates again?
Yes. We are working with interest rates between 9.99% and 15.99%. These are annual fixed rates.
If a childcare provider has ideas of a side business that's a startup, can you also assist with that if it's not childcare?
We can, yeah, we can. It was just loans are similar. We offer it to all types of businesses at different stages. We'll have to make sure that they have experience for that side business. And we have business owners that have multiple businesses, and some of them get to business loans with us as long as they can't go over 100,000. I want to make sure that those businesses are complementary or they're, in a way that it's not unrealistic for them to run both together. So.
For Ascendus, we do require at least 6 months in operations. We work with multiple industries. There are some restrictions, but we don't work with what we'll consider pure startups. So those are businesses that do not have income, have not started the operations. We would not be a good fit for this type of request.
Okay. The next question, these are definitely our grantees. Do we need to show receipts for their purchases from the loan?
For us, depends on the nature of their use of funds. Most of the time, if it's like a purchase of like a vehicle and equipment, we would ask for proof that it was completed, but not for like very minute, like, items. It's usually like large ticket items.
Large.
Yeah. not for small items. No.
Same, we typically will not be asking for receipts, but we do recommend that you keep them for your records.
Okay, this question came up several times, since you mentioned it, Titi. Can they purchase a vehicle?
Oh yeah, yes, we allow that.
Um, does the amount that you approve depend on if they're a large family childcare license or a small family childcare license? Or is it for all family childcare?
Ours is just capacity based on like what they can afford, not so much of the size of their center. We look more on the financial numbers, and what would that achieve? What would they be able to achieve with it? That's what we're looking at.
Same with us. It's more impactful when it comes to enrollment because that's how much income you're having versus capacity. If you're not at capacity, then not necessarily you might be generating the same income as if you were at capacity. So it has more to do with your ability of repayment. How many children are enrolled? How much income are you bringing? How much debt do you have? How much liabilities do you have towards the business? And how much do you have left after you cover those liabilities to be able to afford the loan? And something that I wanted to add, Titi mentioned during her presentation, and I didn't mention, is that personal guarantee. I think it's really important to keep in mind that you being the owner of a small business, you are typically guaranteeing these loans. You serve as a personal guarantor. This means that you are personally liable for paying back this loan. At Ascendus, we report to your personal credit. And so that is just something that you should keep in mind.
Um, someone asked if they had an account with their daughter at a bank and she let her account go delinquent and we had a charge off that I paid in full. Am I not qualified because of her?
I can
You just-
I can jump in. This is a very specific question. I think in this type of scenarios, it's good to look at it, in a case by case. But I will say that we do understand that things happened. If you took the right action and made payments and paid the charge off, for us, that will not be a problem because it will be paid. And so we'll be able to continue to look into the process so long as your credit score was not damaged down below that minimum credit requirement that we have at Ascendus, which is a 575. So if it's above 575, you did pay the charge off, or is below $3,000, we'll be able to consider you for a loan. We might have some limitations around the maximum amount that you can receive just because there are some items that may be affecting the credit.
Yeah, I agree as well. We have a form, a credit assessment form when we have scenarios like that. So we want you to explain what happened, what you've done, and how you are working to repair that. That will tell us like where you are in that journey, and then we'll make a decision based on that.
Thank you. Okay, I'm going to pass it over to Leslie. If you can do the hands raised, then I'll finish up with the Q&A box.
Absolutely. Yeah. So we have a few people that have their hands raised. I'm going to start with Mina. Mina, I'm going to give you permission to talk. Please let me know if you're still in the room with us and if you have your question. We'll give Mina a moment. I also have Mario and Elsa that have questions. So let me go ahead. I'm going to give Mario permission. Mario, if you're available, please let us know.
Hi, hello. My name is Mario. I'm a licensed childcare provider here in the city of Long Beach, California. So my business, I've been having it for roughly my license for 4 years, and I'm looking to get some capital of roughly around
Mario, can you
three hundred
repeat
thousand
the
dollars,
amount?
and I want
You
two.
cut off a
Sorry,
little bit.
yeah, the amount is $200 to $300,000 in order to expand my current childcare facility. I am a home-based provider.
I can speak to that. We go up to $100,000. But if you intend to expand beyond that, we have partners that we work with that we can connect you to that can go up to $350,000. So we'll be happy to assess it and then connect you with those partners.
Okay, great. Yeah, because I was wondering the guarantees for the major construction, and they granted us, I guess, on the capital on my end, I have $100,000 that from LIIF that they were that I was granted, but due to inflation and all that stuff, like we're looking around like in regards to construction and stuff like that, just on permits alone, we're already like 10, in construction and stuff like that. So we're way over the what we were getting for the grant. So we're looking in order before starting construction, we're looking to first secure, the amount that we're looking for, and the contractors were kind of basing off the numbers and the estimates that we got were anywhere from $200 up to $300,000 here in California.
Got it. Yeah.
Okay. Well, thank you very much. Appreciate it.
Okay.
Mina, are you on with us now? Okay, hi, Mina.
So since like I cannot see anyone because I'm just using my phone, so I didn't know you're asking me. Yeah, I got my answer from the other attendants. My question was if we have like a small daycare or large daycare, the amount of money that we get or we approve is gonna depends on the size of the daycare, and someone said it doesn't matter, right?
All right. It doesn't matter. It's not based on your size. It's based on your need and your financial ability for both Working Solutions and Ascendus.
Sure. Thank you so much.
Thank you, Mina.
Sure.
The next person that I have up is Elsa. Give me just one moment, Elsa, so I can give you permission to speak.
Yes, good afternoon. Do you hear me?
Yes.
Thank you so much. I am a base childcare provider. I am from Los Angeles, California, particularly from the South Central. And my concerning right here is about the requirements that you are asking in regards, that we had to prove to you, that we could be able to pay off the loan. Of course, it has to be paid off, somehow. You know what I mean? I agree with that because it's a loan, But I'm concerning because in my particular case, I got too many disenrollments, Right now, I am really, really facing very hardship economically because I have literally 3 kids right now. So literally, I'm making like a per month, like a 4,000 or less than that per month, and otherwise I would not be here, you know. And at this point, what can I do or what can you do for me? When you guys go, because as far as I read in all the requirements, I qualify. The only thing that is my concerning about when you are going to go and look into my bank account, that I'm making very little due to the federal withhold funds, and the many babies and preschool age children are being taken take them by the elementary schools. That's why my I don't have too many kids. So I'm wondering if you can maybe give me anything that I can do at this point, or anything that you can do at this point for me, for my particular case.
Elsa, are you asking in regards to being able to show proof, or
No, I can't be able to show proof, But my concern is that once you see that I'm making per month due to the children that I have currently, I'm making right now, about 3,500, probably the most 3,000, because I have only 3 kids, So I'm really, really, really in bad,
Elsa, do you expect enrollment to go up?
I want to go. I want to, get more enrollments, but also, I wonder, even if I do have the help from you, you know what I mean? And I'm thinking to use those funds for cash flow, while I'm keep working and enrolling more kids using the marketing, because this is the time, that I had to even work more, myself, you know what I mean? So can I use those funds, and can you qualify me even if even if currently I do have up to 3,000 business revenue? Because
We
I'm
would
trying to.
have to. So Elsa, I'm happy to have a conversation offline so we can look more in depth into your expenses, your monthly expenses.
Mhm,
Because if we find that there's room for you to afford even a smaller loan, we
mhm,
can start with a smaller loan. Let's say we say 5,000 right now to put towards marketing is something that you can afford and something we can do, and
mhm,
we can definitely look into it. But
mhm.
again, we need to make sure that you can afford it, and we need to see that it's something that makes sense for you, because especially if you have low enrollment, right, and you don't have a lot of income coming
Exactly.
in, a
Yes.
loan may not always be the answer, because you're going to have to start paying back this back, and we don't want
Yes.
to create trouble for you where you're finding
Exactly.
yourself like strapped
Indeed.
because you have to make payments. So talk to your leaf officer. They will connect you with us. Tell them that you spoke with me during the presentation. I'm pretty sure they'll connect you directly with me. Let's have a conversation offline and see
Mhm,
if we can do something. If not, let's try to get you ready. So as soon as you get that enrollment up, we can
mhm.
look into going through the process.
Yes, because due to the enrollment that I have currently, I am not expecting at all to be asking for 10,000, 15,000, because I do understand that I have to be able to pay it back. I get
Hmm.
it. I definitely
Latonya,
get it.
excuse me, Elsa. We have 4 minutes. We have two more people up with
Okay.
questions.
Thank you,
Latonya,
darling.
I'm not sure if we're going to be able to have time. Let me go ahead. I'm going in order.
Thank you.
Thank you,
No.
Elsa. Um, I'm not sure if I'm pronouncing this name correctly. Menage, is that correct? I'm going to allow you to speak.
Yes,
If
thank
you're
you.
here.
My question is that how would I know if I would be qualified for 9.99 or 15.99? What are the factors to determine that?
Hey Manisha, this is with Ascendus, where we have this range that will depend on, we call it a risk score. And so there's many factors that come into play. There's going to be your credit score, your credit history, your business, your industry, because we work with many businesses. We have a scoring model where depending on where you fall, that's how we know what interest rate you will receive. I can tell you that if your business has been operating for less than 6 years, it's very likely that it will fall over 14.99. And because you're a partner referral, right? Most of you are working with Leaf. The ceiling that we have for you is that 14.99%. So we will not go up to the 15.99. So anyone that's attending this webinar, just think of our interest rate between 9.99 and 14.99%.
Okay, it is over 20 years and excellent credit history.
And so you're very likely going to fall at the 9.99%.
Thank you. And one more
Mhm.
question. So if I get it for 5 years and then I am able to repay it for 3 years, then how would that work?
Perfectly fine. You can make additional payments. All additional payments will go towards principal.
Thank you. Perfect.
Thank you. So now I'm going to go over to Latanya, and this will be our last live question, then we'll wrap it up.
Hi, thank you so much. Can you hear me okay?
Yes.
Okay, great.
Oh, Latanya, we lost you. Go ahead.
Can you hear me now?
Yes.
Okay, great. I was granted the major infrastructural grant, and but the things that I got approved for, I need other stuff. Would this be something that I could apply for a loan to get my inside furniture, to get the playground equipment, things that were not approved on that grant?
Yes. Anything
Okay.
related to your daycare needs.
Okay, wonderful. And then just a follow-up question. I know we're at the end here. I something came up on the submittal, and I believe I sent some reply back saying that I was interested in this opportunity, but then I never heard back. What's the timeline from me reaching out to my Lyft person to where they get back to me to start this process? Or did you guys already cover that probably?
We'll check on that for you.
Okay, thanks, Miss Vanessa. Face with a name.
Thank you.
Okay.
You can't see me, but I can see you.
Okay.
Thank you, lady.
All right, so we are at time. I know we have tons of questions still. I'm going to encourage everybody to connect with your LIIF program officer, and then I'll hand this over to Vanessa to wrap it up.
Yeah. Thanks. I know we've been saying it. Please reach out to your LIIF program officer. We will figure out with you who's the right partner. We have 2 partners to work with here. They're both great, and we'll get you to that right partner, whether it's Ascendus or Working Solutions. I know this was a lot of information. We will also be sharing out the recording, so you'll have that too. So thank you all, and we'll get back to you. Have a good night.
Thank you, Working Solutions and Ascendus, for joining us. We really appreciate your time.
Thank you for putting this up. Bye.
Thank you all. Have a great night.
Bye-bye.
Thanks, Martina. Bye.